In today's video, you're going to learn what are equilibrium blocks, how to trade them, and how to trade my personal favorite, change in state of delivery, equilibrium blocks. What is a equilibrium block? An equilibrium block is a series of 3 candles, one up close candle, followed by a singular down close candle, followed by another up close candle. Now, the importance of equilibrium blocks is the body, only the body. We only care about the body. So if you look at this red candle here on the left hand side, notice how the body of this candle is inside the range of the 2 previous up close candles here. That is what creates your equilibrium block. We're going to show you some live examples in a minute here. Now, the reason why equilibrium blocks are so powerful is because oftentimes it lines up with other concepts. So if we were to dive into this time frame here, let's say this is the hourly time frame, chances are this expansion here is also paired with the fair value gap. When you are seeing equilibrium blocks, chances are on the lower time frame, there's also potentially a fair value gap in that range as well. Now, if we look at the right hand side, we also have an equilibrium block. Now, however, this equilibrium block does not support bullish price action anymore. What do we notice here? Notice how we get the body close back below this range. So by us seeing a body close below the range of the equilibrium block, that is what offers a change of state of delivery. And now you will notice something very often within trading equilibrium blocks. You will notice if price does not support the equilibrium block, price more times than not, almost 99% of the time, will pull back and give you an entry. So that's why equilibrium blocks are one of my favorite entry models. Because let's say you were bullish, right? And price ultimately never held up this equilibrium block. Well, once you get the body close below this range, price will oftentimes retest the same equilibrium block that did not support the bullish price action, and now you ultimately know that, hey, price is now looking to seek sell side liquidity, or vice versa. If you have not seen the introduction to equilibrium blocks, I would highly suggest you pause this video and go watch that. I'll put the link in the description, and once you're done, please resume the video. First, we're going to look at a regular equilibrium block example to refresh your memory, and then dive straight into change of state and delivery, equilibrium blocks. In this example, what do you notice first? First, you have an up close candle, followed by a single down close candle, followed by another up close candle. That forms your equilibrium block. This range in between the 2 up close candles now form your bullish equilibrium block. Now, we don't have 100% confirmation until the following candle opens. When the last 2 candles that form your equilibrium block are also at an equilibrium with price, you have to wait for a 4th candle to open to get confirmation that price wants to expand to buy side liquidity. We have to wait 1 candle, and notice, what do we see? We see the expansion up, but we will not enter off of this equilibrium block immediately. We'll actually wait for price to come back to this range before actually looking to take longs. When trading equilibrium blocks, it is very, very important you label the time frames in which you found your equilibrium block. So because we're on an hourly time frame, we're going to label hourly equilibrium. Now, our job is to be patient and wait for price to return back to this range. We never want to chase price. You always want to let the trade come to you. Let's play this out a bit. Still no retest, still no retest. And here we go. We got our retest. So at this given point in time, what I like to do is personally put my entry at the start of the last down close candle that forms the equilibrium block, look back to the left and figure out, okay, well, where's our drawn liquidity? When trading equilibrium blocks, or any concept for that matter, you want to make sure the lower time frame is supporting the bullish price action or bearish price action, depending on where the market is headed. So what can we notice here? Once price pushes down into this range, into this equilibrium block, notice how we get our expansion back up. With that being said, very much likely, the very least we will see is price give us a push back up to about 18,323 for a 3.07 risk to reward. Now, once we actually see the body close above this high, that's where we get 100% confirmation that price is now seeking the next internal liquidity at 18,486. If you've watched the first equilibrium block video, then you understand you always want to put your stop loss at the last down close candle which the equilibrium block was formed. So we'll put our stop loss down about 25 points which is at the bottom wick of the last down close candle at 18,221. Now let's play this out. Notice how we get that aggressive move off this equilibrium block, also forming another bullish equilibrium block at 3 o'clock, and now we start to see this expansion. Something you will notice within this trade setup is we had a number of equilibrium blocks that actually formed. Notice how we get another equilibrium block right here once we start expanding to our next internal liquidity. What you would want to do is ultimately to add to your position here, and because both of these ranges are pretty much inside the same range, we have to wait for the fourth candle for confirmation. Later, we would actually enter on this fifth candle. So here, put your stop loss down here, or actually you can even put your stop loss down here of the liquidity that ultimately sweeps the relative equal lows based on the hourly time frame. Still keep your same PT, and now you have a brand new setup for a 2.78 risk to reward trade. Now let's play this out some more. And notice how your PT gets taken. That is an example of a bullish equilibrium block. Now let's go dive into a change of state and delivery equilibrium block. For this example, what do we notice? We have our bullish equilibrium block. We end up taking out internal liquidity here at 19,837. So let's mark out the equilibrium block. It came off the 10-minute time frame. Make sure you label the time frame in which the equilibrium block came from. And the reason for that is because if you ever see two different equilibrium blocks, such as an hourly equilibrium block and then a 5-minute equilibrium block, because the hourly equilibrium block is the higher time frame, likely price will respect the hourly equilibrium block much more than it will respect the 5-minute. Let's say you had a long bias and you wanted to target this next internal liquidity level, also paired with that tiny fair value gap range, for a 2.65 risk to reward trade. You have your entry here off the equilibrium block. But what happens? Notice how we get the body close below this range. You would be stopped out of this trade. Now, that is no problem if you're stopped out, because if you are focused on the process of trading, then you know exactly what to do. All you have to do is close your long position, exit that, and now you would want to start your short position. You'd want to start your short position on the retest of the same equilibrium block you went long on, and now look to target internal sell side liquidity. Notice how the following candle gives you the retest. That is where you would look to enter your short. And then you would want to target the next opposing liquidity, which we have down here at 19,767. And that is why change in state of delivery equilibrium blocks are by far one of my favorite setups. Because even if you do end up on the wrong side of trend, if you focus on the process and understand that we got the body close below the equilibrium block and now have shifted trend from bullish to bearish, you almost know exactly where price is going. Because price did not support the bullish 10-minute equilibrium block, you now know that price is seeking opposing liquidity. I hope you found this video useful. If you did, make sure to smash that like button, subscribe, and comment if you need help with any trading concepts. I'll see you guys in my next video.